Cars will weigh a heavy burden on your financial future if you don't understand these tips. So stay along for the video. Everybody knows that having a car in America is really important. If you don't have it, usually you're gonna have to stick to public transportation or rideshare. Typically, public transportation in big cities are somewhat alright, but sometimes it can be dangerous depending on where you live. And rideshare can definitely get pretty expensive, especially if you're going farther distances than shorter ones. It's most likely not worth having to pay for rideshare if you're not getting paid a lot of money. And then even with public transportation, you're still gonna have to pay for public transportation. And public transportation is usually a lot slower than having your own personal vehicle. So that usually tends to everybody just getting their own car. Important what car you choose for your financial future, especially if you're buying a car that's more or less than your means. So let's dive into it. It's important to be aware of these tips I'm going to give so you don't choose a car that's more than your means and you fully understand what you're getting before you actually buy it. It can save you a lot of stress down the line. Having a reliable vehicle is really important, especially if you have to commute daily and you don't have to worry too much about your car. So it's really nice if you're able to choose the right vehicle. So let's get into it. First thing I want to talk about, depreciation. Everybody knows the moment you buy a brand new car off the lot and take it off, your car is going to go down about 20 to 50%. And the older the vehicle is and it's still generally new, you buy it off the lot, it's going to go down around 15%. That's just how it is. Used vehicles obviously go less than brand new vehicles. Typically, if you want to get a new car, you're going to want to get it used so you avoid taking on the hit of losing about 20 to 15% on your investment immediately. And then you could just have your car and then eventually just wear it down and just take the loss on that. But some vehicles depreciate faster than others. Usually luxury brands depreciate a lot more than your everyday drivers. Honda, Toyota, those usually maintain their value pretty well, especially due to their durability and pretty much being economic cars. But your more luxury brands like Mercedes, BMW, they're going to go down a lot faster, especially due to them needing a lot more maintenance, and then the maintenance costs a lot more than those economic cars. So it's important to see where you land in your income and see what you actually could afford, because do keep in mind you're going to actually be paying a lot more for a luxury car than you will be for just a normal sedan. So when you actually buy this car, you're going to have to most likely finance it. I know probably some of you people will be able to actually have all the money up front, and depending on how low the car you're trying to buy is, you might be able to actually just buy it up front. But I think most people just finance their cars. So with financing your car, do keep in mind you're going to be paying more than what the sticker price is for the car due to the amount of time you have on the loan and the interest rate. So as you can see, the longer your loan period is, the more interest you're going to be paying over time. But the shorter, you're going to be paying less interest. But obviously your monthly payments can be higher. So that's why it looks attractive if you're buying a car and you can just extend the months to like 6 years and your monthly payment goes all the way down. But do keep in mind you're paying a lot more interest and you're going to be having to pay a car off for 6 years. So I don't know about you, I like to own my stuff generally. So some stuff it's a lot harder to actually own, but you always have a choice of whether or not buying a vehicle. So it's important to keep that in mind if you actually pay this off within a reasonable amount of time. So when it actually comes to financing a car, this is where your credit score actually comes into fruition. If you have a higher credit score, you're going to get a lower loan than somebody else who has a lower credit score. So once again, if you're able to set up credit score or credit history prior to buying a car, then that can really help you, just so you get a decent credit score before actually applying for one. Or if you could have a parent that has good credit actually sign with you, then that could actually improve your interest rate as well. But do keep in mind they're more reliable for that than you are, so don't screw your parents. Alright, cool. My third tip, now that you buy your car, you have your finance, you like your car or whatever, the money pit doesn't end there. So you're still gonna have to pay for gas monthly, and you're gonna have to deal with maintenance fees. So generally you could avoid maintenance, I guess, if you really want to for an extended amount of time, but eventually those maintenance items will come back to bite you in the butt. So it's important to keep ahead of the maintenance, especially so your car runs well and you don't have to deal with greater problems down the line. Obviously the more maintenance that you blow off, the more damage that will be happening to your car. Depending on what car you drive, you might be able to just keep it going for a while and then just sell off the car and kind of like save money that way. But you're also gonna have to be buying another car and then just driving that for a little bit and then selling it, doing the same thing over and over again. So if you just buy a nice vehicle or a decent vehicle, you just do constant maintenance, then you can actually extend the period of this car's life for a very long time, and you can just trade it in later down the line, get a nicer used vehicle, and continue on that path. It's a lot more sustainable if you're able to do that than just turning and burning cars. Once again, luxury cars, their maintenance is going to be a lot more expensive, a lot of imported cars, you're gonna need to the parts are a lot more expensive than the normal U.S. cars. So if you're really willing to have that luxury brand, you're gonna have to be willing to pay for that luxury maintenance, or you could do it yourself. There's YouTubes on videos to actually do this maintenance by yourself, but you're doing maintenance by yourself. So if you have no clue how to do any of this maintenance with cars, then you might end up messing with the car, more damage to the car, and then you're actually going back to the dealer and then paying a lot more. So be willing to pay a lot more for maintenance on your cars if you are willing to buy a more luxury type of car. Fourth tip, we actually have EVs now, and EVs have been a thing for quite some time now, almost like 3-4 years. There are vehicles out there that are actually quite affordable with our EVs. It might not be a Tesla, but you can still get a pretty decent EV for average price. So depending if you're really interested in getting an actual vehicle over a gas, it might be worthwhile to go take a look into it, especially due to you're saving a lot more money in gas, but the maintenance fees can be a lot higher, especially if you need to replace batteries. So it's important to look and see if there's battery deterioration in that car. Like, look into the miles more and probably the age of the EV, if you're looking into buying a used EV. I don't really know too much about EVs. I hope to get a Tesla one day, but as for now, I'm just gonna stick with my Honda. Number 5, having a car payment will increase your credit score if you do pay it off monthly. It shows the lenders that you're capable of paying for something every single month, on time, every single time. It will go a long way on your credit score for just paying off a car. But if you do happen to miss a payment, that's gonna cause a lot of damage to your credit score, and then it's always gonna be on there as a missed payment. So you always want to do it. You always want to pay it every single month if you could do it. For some reason, if you can't do it, then I would talk to the bank and see if you can work something out. But if you're not able to, then they're definitely gonna put on your credit score, on your credit report, and it will damage your credit score. So make sure you're able to pay the monthly payment and make sure that it's quite comfortable, or else it will do damage. Number 6, take a look into insurance premiums and get a couple quotes before actually buying a car, because depending on what type of car you get, your insurance premium will be more expensive, and chances are for financing you will have to have full coverage on that car. So get a couple quotes, see what the total amount of insurance that you have to pay, and then your total payments on your car, add those two together and see what the total amount of payments for your car will be every single month. Depending on what it is, it could be pretty high. It's important to take a look into it and see what you're actually be paying total every single month for insurance and your actual car payment. $500 to $900 car payments every single month for like 6 years will destroy your financial future. So it's important to choose a vehicle that you can afford, paid off as soon as possible. So you could actually have a paid vehicle, and then so you have your paid vehicle, just pay insurance every single month, and then just invest the rest into an S&P 500 or whatever type of stocks you enjoy investing into, or just yourself. I understand that vehicles in America are quite necessary. The transportation here is not as good as some European countries, but we have to play with the cards that we have been dealt. Understand these tips, get a car that you're able to buy and pay off within a couple of years of you just working your job. So depending on your income, it could be a little bit higher or lower. Generally, you don't want to be paying an obscene amount for a very long time, because especially during younger years, you're not going to be able to invest that money into the stock market or whatever type of investment you're really interested into. So it's going to put a hold on your investment journey, and overall you want to start that as early as possible so you have as much interest in the beginning so you can increase it over time, because as you guys know, so the more time you give it, the more money you can potentially see. So let me tell you guys about my story about having to buy a car and how I paid it off and everything. So I actually bought my car in 2021. This was just before the car prices actually started increasing to a crazy amount. It's kind of similar to what it is today. The car prices, at least. The interest rates are obviously a lot lower. It's closer to like 2%. Now it's closer to like 6%, so it's a lot higher. So I bought a 2012 Honda Accord used at like 70K miles. I got it for like $13,500. I was trying to get something a little bit lower. I thought I could get a little bit lower. I couldn't haggle the dealer, so I just took the hit on the chin, and I bought that car. So far, I haven't really had any problems with that car. It's a Honda, so it's gonna just pretty much run forever. 150, 200,000 miles, as you guys hear. Hondas just keep on going forever. But yeah, so I bought the car, made a couple payments, probably for like 3 or 4 months, and then after that, I just paid the rest of the car in cash. I didn't put a down payment for it because I knew eventually I would just pay it off in full. I probably just put like $8,000 down at the end of it after like 6-7 months. So I was able to increase my credit score a little bit by just paying off those cars and then eventually just completely buying my car. The moment I paid off my vehicle, went down to my insurance company and then I lowered my coverage now I'm only paying around $150 for my car insurance, so it's a lot lower. And gas, probably pay like $160 a month for gas, so in all I'll pay like $300 for my car every single month, and that's a lot lower than what it used to be. Even then my car payment wasn't that high, but yeah, now it's like it's a huge weight off my shoulders knowing that I could just not have to deal with a car payment or an obscene amount of car insurance, and I could just send all my money into my investments and see my investments grow over time instead of just putting more money into something that's going to depreciate over time. Eventually I plan to sell my car, but until then I'm going to keep on driving it. Probably drive it to 200,000 to 150,000 miles. Currently I'm almost about to hit 100,000 miles, so that's quite exciting, but it comes with a lot of maintenance. So I gotta make sure my car's alright and that'll actually last that long. But I don't know, maybe one day I'll be able to trade it in, get maybe like $8,000 to $10,000 for it, and I'll put that down towards a Tesla. Might buy a used Tesla. We'll see. That'll be pretty exciting. But that's the end of the video. If you guys have any similar car stories, do you have any nightmares, drop it down in the comments. Drop a like, subscribe to the channel.